How to use the 4% and dollar breakout scan to make money. In this video, we'll look at a swing trading method using breakouts, and for that we are going to use 4% and dollar breakout scan. So let's start by looking at what is a 4% breakout. 4% breakout is basically a stock which is up 4% and whose volume today was greater than volume yesterday, and volume is greater than 100,000. So you're basically looking for a stock which had a volume and price surge. Similarly, if you're looking for a negative side of the particular scan, you're looking for a stock which is down 4%, whose volume was greater than yesterday's volume, and volume is greater than 100,000. And this we will marry with dollar breakout. So when we are looking for a dollar breakout, what we're looking for is a stock which is up at least 90 cents from its opening price. So C minus O basically means like closing price minus opening price is at least up 90 cents and volume is greater than 100,000. Similarly, on the downside, what we are looking for is a stock which is down 90 cents and volume was greater than 100,000. So we start by running a scan which is 4% breakout scan. So if you look at this particular scan, it is on the universe. Universe is a list of stocks which is all stocks plus ETF plus ADR, on which we're going to use the 4% scan which we just now saw. And once you run that scan, you get 101 candidate on the bullish side. Similarly, if you run the bearish scan on the universe, and basically in order to reduce stocks which are like very low price, I added additional filter. C minus O is greater than 19 cents or 20 cents. So basically you're looking for stock which is down 4%, similar to what we are looking on the plus side. So you get 137 candidates. And similarly, we run a bullish scan which is the dollar breakout scan. The dollar breakout scan is universe. On that we run a scan which is stocks which are up 90 cents plus and which have a volume of 100,000. Similarly, if you use a bearish scan, you will get today 197 candidate where you're saying that universe and stock is down 90 cents. So all these scans, once you have them set up, we'll start by looking at the bullish side of the equation first. So you have basically 101 stocks, and also on the dollar breakout side you have 219, but there'll be stocks which will be common between those two scans. So in order to not spend time doing this two times, what I do is I take this list, copy all symbols to a bullish working watch list, and similarly I will copy all the bullish dollar breakout to this bullish works. So once you have this bullish working list, which is a combination of dollar breakout and 4%, you're getting 287 stocks basically. Now, just because the stock is in the scan doesn't mean that it is a buy. What you're looking for is a setup, and for that setup there are primarily 4 conditions which I look for in a setup. First is like the linearity of the first leg. So if a stock is going up, the first leg of the move is what you're looking for if it is linear, and then you're looking for a continuation kind of a setup. Second condition what always look for is an orderly consolidation or a pullback, because you want to buy a 4% breakout from an orderly pullback or a consolidation. Third condition is stock preferably should not be up 3 days in a row, and fourth condition is it should close near high. So if you apply those conditions, you will find that very few stock might meet that condition today. So if you look at this stock, it doesn't have an orderly pullback or a consolidation, plus stock is not really breaking out clearly. So we keep going. Similarly, Amazon, this is too wide a consolidation. What you're looking for is a more orderly kind of a consolidation, which it was here. Again, Google is another stock which has got a very wide consolidation or a pullback, not orderly pullback. So that's not the kind of stock which I look for. The kind of setup one I will look for is something like this, where like you have the first leg which is very linear, very orderly sideways move, and then there is a breakout, stock closes near the high. That's the kind of setup we are looking for. So obviously this again doesn't meet that condition. Google doesn't meet. Regeneration again doesn't really like, and it was a better setup earlier. Now it has got a choppy consolidation. So as we keep going till we find good candidate, and you'll find that this is a good candidate. Why? Because you have very orderly first leg, very compact 1 2 3 4 5 days of consolidation. This was like a very small day, and stock closed and stock closed near high. The stock is up 9.66%. So ideally, the stock should have been bought earlier in the morning. And when you run these scans, the stocks start showing up much earlier. So obviously, this is a kind of a setup which is I would have bought earlier if that is the kind of setup which you want to look for in a 4% or dollar breakout. It meets every condition. This is very orderly. Stock consistently kept on going up for 10 or 12 days, and then very small consolidation, very orderly consolidation. Volume was low during the consolidation, breaking out. Volume is high on breakout and also closing near high. Okay, so we keep going. BIIB. This is a ETF again, like was up. Consolidation is not so orderly, so I would let it go. Then you have bio laboratories. Like in this particular case, what has happened is you have a choppy consolidation or a choppy sideways move. Stock didn't close near the high, so I would let it go. So as we keep going down, we will see that there's a stock which had a big gap up on a news and earnings, and then it went sideways in orderly manner. Stock was like for last 2-3 days it had a very compact kind of a trading 2-3 days sideways, not up 3 days in a row. Stock is closing near the high, so this I already have a position in the stock, fairly large position. Then again, a stock like this will show up early in the morning itself. Like once you set up everything, you might find this stock much earlier. So can it be entered tomorrow? Yes, it can be still entered tomorrow. Something like this is slightly risky to enter tomorrow because the stock is already up 9%, while this particular stock is up only 2.75% because it's a dollar breakout. If you see, it's a dollar. It is in a dollar breakout scan. So we keep going again. This is a choppy base, not a orderly move. Even the first leg was not orderly. The stock is just stuck in a wide range. So I would let others trade stocks like this. Similarly, a stock which is like this. So as we keep going down till we find good setup, and once you know what you're looking for, this is fairly simple stage, and you can go through 287 stocks in 10 minutes basically. Plus remember, during the day multiple times one would have looked at these stocks if you're a full-time trader. So BA is one. It's not really a very orderly kind of a thing. The first leg was orderly, maybe kind of a setup. I would put it in the setup, but stock also has been rallying for some time. So Shopify again, choppy base. So we keep going till we find a good candidate. This Restoration Hardware, see, very orderly first leg, sideways for 2-3 days, didn't close near the high, so that's one of the negatives. The earnings is on 9/14/2017. The float is very small, 14.9 million, so maybe kind of a thing. Stock has been going up for some time, so it's not really a very young trend, so that's another consideration for me not taking something like this. It is possible candidate, but not something which I bought. So similarly, we keep going. It's very choppy. A stock like this is like in a very choppy, not something which I would ever look at seriously to buy. Then you have MRAM. In this particular case, the stock is up 2 days in a row. So CBNA, so many of these stocks. Raytheon, like again, was up 3 days in a row. So we keep going till we find a good candidate. Many moves faded also, so that's a negative on those. So if a stock cannot maintain its momentum till the end of the day, then it's not a good candidate. Now this is a stock which had this orderly up leg, then went sideways, had a breakout which really, like the second day it followed through. This is the day when the Baba earnings came out, or and then gapped up and then corrected, and then again bounced back, and stock is near the regained its basically the selling. There wasn't really like, and there was immediate bounce back. So this is the kind of stock which has the resiliency, and it is going sideways. Isn't really very orderly. I would have liked a more orderly kind of a setup. Again, stock was up a little bit only 0.123. So technically it was up 3 days in a row. So these are some of the factors, but still the trade worked out very well. The stock, I already have a position, and also a good size position in this particular stock taken in the uh, first half of the day, basically. So what you'll see is that this particular stock did follow through after that, and is a good candidate. Now it is not a good candidate for a buy. Again, stock is up 9%. Some of these kind of breakouts are basically very difficult for working people to get into, because you have to be there during the intraday to have the get a good entry points in some of these. Otherwise your risk can increase, and correspondingly your position size can increase. So that's the thing. So we keep going until we find good candidate. Now this is the second day of the breakout, so obviously that's not something which I would look at. And those of you who recently attended the boot camp, we spent a lot of time going on these things, criterias, and also thousands of examples from the past. So basically, if you look at, like, none of these stocks meet the condition, this may be kind of a situation. See, this is like gone sideways now, going to breakout. Stock did close near high, so this is a very orderly kind of a move, so can be considered. uh, when you see a stock which has got X mark like this, it's a buyout. So you don't want to buy something which is a buyout. Okay. Esperion Therapeutics, Exacta. So we keep going till we find good candidates. And I'm going at a speed because many of you, most of the members know what to look for in a 4% breakout. But if you feel that a particular stock which I didn't select is good candidate, you can always put that in the comment and I will have a look at it. Now this is, again, stock did close near the high. This is like on some news, big news. It wasn't really, the volume wasn't high, so I would let it go. Now this is the former Yahoo split. The Now as you keep going down, if you don't find good candidate, it is what it is. Like, some days you find a lot of good candidates, some days you don't find enough candidates. So it depends on the market condition. To that extent, the scan is self adjusting. If you the market is, if the market is breaking out, you'll get more candidate in the 4% and dollar breakout scan. So this is going sideways. Basically, it's breaking out. Volume was high during this correction, so I'll let it go. This is, again, like, this was a very orderly move, but see, the volume was high during this particular correction. This was very orderly pullback to that extent, so it might work. But like, that's what I looked at and I said, okay, let it go. So stock is up 2 days in a row, so that's itself will eliminate a stock like this. As we keep going down, now you'll find very low price stocks. So if you have a smaller account, you can concentrate on the low price stocks. So as you can see that today there are not many candidates which meet our criteria. So if you look at like a candidate BPMC, I wouldn't buy a candidate like this now, because unless one got in early into this particular kind of a move. The market was choppy in the morning. It wasn't really like selling off. So I saw this stock, but I didn't really get into it. But that's like, and it was a good candidate. Baba already a position. BA, I don't think, and it looks to me like a large gap and slightly extended, so I would let it go. And also, this particular correction wasn't really like a very orderly. Bausen, which already have a position in. Again, this was a choppy base, not the ideal kind of a situation to that extent. The size of position is small, relatively small. The Chinese stocks, when they get moving, they can make big moves. So that's one of the things which you have to look at it on a larger context. So that was one of the reason why I took it. Site is one very good candidate, still very good candidate, can still be entered next day, 2.71. Again, stock is made a move, is going sideways for almost 2-3 months now, and now attempting a breakout. If you see, volume wasn't really high, volume hardly was high, so that's the one negative on that particular stock. So the one which I bought was, these two were the one which I bought basically. So those are the 4 or 5 candidates. So what we can do is I put them into one list, momentum burst list. Now, so this is 287, and it took us like 14, 15, 16 minutes. But like in real life, once you become good at it, it should take you less than 5 to 6 minutes to go through all these candidates. So now, same way, what we are going to do is we are going to look at the bearish side of this equation, and for the bearish side, we copy all the bearish 4% breakdown into a bearish working list, and similarly, we take all the $4 breakout and put them in a bearish list. So once you put all these things in a bearish list, what you will find is that you have 290 stocks to look at. So now again, like basically I start by looking at the one which are down the most. Now you have O'Reilly Automotive. So the stock has been down for some time, so it's dropped a lot. This is not the kind of setup which one looks for. One looks for a setup which is like really early in the trend and continuation kind of setup. Now here the stock is down almost 1 2 3 4 5 6 7 days. So again, this is not a kind of a setup. This is just a continuation of this selling which started from this particular day, or a breakdown which happened, which was also a 4% breakdown. You'll see that the stock had a 4% breakdown, and then it had a follow through for the next couple of days. AutoZone similarly has been down for some time. This was a good break setup here as a short probably. So we keep going. Simon Property Group. Now this stock can be shorted. This has been going down for quite some time. The stock is in a negative momentum kind of a situation. This was a counter trend move which failed, 4% breakdown. So that's one candidate. Dorman Products, again, anything related to the auto parts, because of Orly's earnings when they came out has been down, and so you'll see that their things are down. But you have to also have a good setup. So that's basically Chipotle Mexican Grill, continuation from this sell-off from this particular day, and again a breakdown, 4% breakdown. So you can see how stocks move in the direction of 4% breakout or 4% breakdown. Here there was a big high volume breakdown, and the stock is moving in that direction. Again, Advanced Auto Parts, continuation kind of a move, but not a good setup. So Burlington Stores, this is a good setup. See here, first leg was down, this counter trend move which failed. So that's a setup which is like likely to work. CBRL, you have a lot of stocks which turned negative today, but this is a kind of a stock which is just caught in a choppy range, so you don't want to get into a stock like that. Then so you have Diebold, which again failed. See, when you get a stock down like this, there tends to be a counter trend move, and that's the nature of the market, because there are always bargain hunters and there are more buyers than sellers. So this is again, like, this is a nice continuation down move. See here, first leg of the move very orderly, 2-3 days, 5-6 days sideways and breaking down now. And then you have, so we similar to on the bullish side, you can go really fast when you know what you're looking for, and then you can really find candidates very fast, even intraday basically. So now again on the short side, like can I the in the ETF side, this is definitely a short. See here, 4% breakdown, and from the 4% breakdown, the ETF went down 33 or 34%, 40%. So this is a big breakdown again, 11%. So in triple ETF, that's the problem. Like on the breakdown or breakout day, this ETF might be up or down a lot percentage. So you have to adjust your position size accordingly. So we keep going till we find good setups in this particular thing. This is again a continuation of a breakdown. See, stock has been very choppy, so that's the negative on this one, but it's a continuation of this down move. So I wouldn't take something like this because of its choppiness. So as far as possible, you want to improve the probability, and by finding a stock which is already in a downtrend, in a very orderly downtrend, you increase the probability of finding a good setup basically. And when you go through this 4% and 4% breakdown, it also tells you what is working and what is not working, which sector is going down. You'll see a lot of oil and gas stocks today. They had a counter trend bounce a couple of days ago, and then it failed. The oil price itself crashed, I think, or went down today, and so a lot of these stocks are also down. A lot of stocks which are making a new high and then their breakout is failing. That's also another thing which you'll see. So it's a little bit choppy environment for trading basically. So so if you keep looking for candidates, good candidate, you'll find that uh, there are stocks which are beginning to break down, not on very high volume. Volume has been low on many of these breakdown moves, but especially the technology stocks after making a big move have turned recently, and so you'll see a lot of oil and gas stocks which are down, which had like just a couple of days ago looked like they're breaking out and then they broke down. Similarly, many rates are down also. Ocean Engineering, that's another weak stock. You can look at like see this counter trend weak bounce. Stock has been in a downtrend for some time. You might get chopped a little bit on stocks like this because there is not really a smooth downtrend. So So this is again a continuation down move. See, stock is down 6 or 7 or 8 9 days, and then small counter trend move, and that has failed. So that's a stock which can follow through. Always remember that many times on the short side, follow through can be a tricky thing. The health stream again, big breakdown, small counter trend bounce, and there's this folly that's failed. That bounces looks like it is failing. So and many times like when you have a setup which looks like a good anticipation setup which might break out to the upside, always remember when you have anticipation setup, it can break out to the upside, it can also break down. Basically when there is a orderly sideways move, doesn't necessarily mean it is 100% going to break out to the upside basically. So many of the solar stocks were also down today, and so solar age again, like a stock is down after making a long move. All these oil and gas drilling stocks, similar pattern, but they're down so much that I'm not really like They are not really high probability setups according to me on the short side as of now. See again, continuation short. See first leg, counter trend bounce is breaking down. Stock did close so much near, but like it closed almost near the low, so lower priced one, so it can work sometimes. So it takes around, if you're really fast and like I'm going at a very slow speed doing this, typically this would, the entire long and short side of this thing will take me 10 to 15 minutes to do at best, like in 10 minutes basically. So this is again another setup, very low price, so I wouldn't like really get into that, but like you have a couple of possible candidates. So if you look at it, so your SPG, your Burlington, your Buffalo Wild Wing, which is a high price stock breaking down, uh, choppy sideways range, but like this was very smooth downtrend. Trend intensity is also in the negative. This oil ETF, then your Ocean Engineering, SYY, Health Stream, and Fluidum as the possible candidates. So we can copy all these to momentum burst. So once we clear all the flags, now what you have is you have possible candidates, and basically again most of these candidates, better entries are during the day for full-time traders. If you are end of the day traders, so basically then you have to correspondingly risk lower, because your entry may not be as good as somebody who is watching it real time basically. So these are some of the stocks which are breaking out or breaking down today. So that's as far as 4% breakout, but this is not the only way in which we find buy candidates. This is one of the setups ideas which we trade, and there is another setup idea which is like anticipation and also low threshold breakout. So that will give you additional candidate, and some of those candidates will be better than these candidates because they will give you entry points which will be lower risk entry point than these breakouts. So in the next video I will look at a low threshold breakout and how to use low threshold breakout to find candidates.